Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Monday the 22nd of the 3rd, 2021. The time is 0445 GMT, Asian session coming to a close, European session firing up, and our lunchtime North American US session. Right, Friday the 19th, then the last full trading day last week. We had a negative opposed driver in the pound at minus 147, front and back door flows. The positive flows mainly going into the yen at plus 82, into the dollar at plus 66, and the euro was the negative rock at minus 1, activity plus or minus 148. Last week then, just to remind you what was happening, we had a positive opposed driver in the yen, plus 159, front and back door flows mainly coming out of the pound at minus 123, next out to the euro at minus 114, and the dollar was the positive rock at plus 78, activity plus or minus 237. So last week then we had yen strength driving and pound weakness soaking it up, with the euro and the dollar holding the fort in the middle. Intraday then, what's happened so far in the Asian session to about 15 minutes ago? We've got a positive opposed driver in the euro at plus 69, front and back door flows mainly coming out of the yen at minus 64, out of the dollar at minus 7, and the pound is the positive rock at plus 2, activity plus or minus 71. Right, what's going to knock this about today and this week really? Well, we've had the China rates announcement, and they basically kept their rates basically the same, so no major change. The prime rate was unchanged for the 1 and the 5 year, so that's basically stability there. We've got the Fed's Powell speech today, so that's something. Tuesday we've got GBP employment count, we've got Bank of England Bailey speech tomorrow. Fed testifies and JPY minutes. So the pattern really for today and tomorrow is it's going to be a noise generated speech environment, and we've got speeches from the pound, the USD and the JPY, and the other event of notable event really was the Turkish lira, the sacking of the bank governor in Turkey, and that's shaking up the emerging markets. Right, so let's get rid of this and let's have a look what's been happening in the wider markets and the asset flows. Our trades are about 900 points in profit, which is not bad, considering we've driven it through all these rates decisions and Fed, etc. But it is sticky at the moment, but anyway, we'll talk about that in a minute. So the euro complex as a whole, the 7 FX pairs, is soft, weak, except against the pound, the AUD and the NZD, which are weaker. The yen is strong across the board. The pound is weak across the board, and the Swiss is strong except against the dollar. The CAD is strong except against the yen, the Swiss and the dollar. The AUD is weak except against the pound. The NZD is weak except against the pound and the AUD, and the dollar is strong except against the yen and the Swiss franc. Right, so what have we got then? We've got yen strength, we've got pound weakness, and take your pick in the middle. Right, so that's the flows, if you like, in the Asian session. Now let's have a look at what's happening in the wider asset classes. So we'll start with dollar index. Right, dollar index, basically it broke the resistance, it came back and it's now operating about here at the previous resistance point. So gold came off and it's now approximately 0.22 from the floor in model terms. So it's come back a bit, but it's still pretty soft. Oil's come off. It's now about 0.3 from the high, our modelled high. So oil's come off a bit. Wall Street, what have we got? It broke the highs. It's now back. It's come back a bit to there. The S&P, it broke and it's now sub high, and the tech never made it there, and it's now operating about 0.4 from the floor, from the recent modelled low. So that's where we are with those. What else have we got? We've got the US 10-year and the bund. Right, so US 10-year and the bund. Right, the US 10-year basically looks like this. It's bounced. So this is the price. So yields are very strong, but the yields have just come off slightly. It's about 0.1 from the model floor, and the bund looks about like this. It's about 0.4 from the floor. So relatively speaking, US yields are stronger than European yields in the bund, and this obviously has a bearing when you're looking at the euro dollar. Right, copper, remember we had these five pumps. It came back to the second pump, it went to base camp, it's messed about, and it's now operating about the 2.5 pump, so it's about there. Right, so what else we got? We got US steel. Remember, US steel looked like this. They sold it off at the double top, and it's now about 0.7 from the floor, or 0.3 from the top. So gives you an idea. Right, so let's round this up then. There's a little bit of negative noise going around on iron ore. China's had to row back steel production because of pollution, and then there's a slight knock-on negative effect on the AUD. Very temporary, very noise driven. China isn't going to let a bit of pollution get in the way to global growth. So there you have it then. So we're long AUD dollar, and we're short NZD in the euro, the pound, the CAD and the AUD, and we're about plus 900 points and change profit at the moment. Right, and we've got about 11 trades running in those positions. Right, so basically it's going to be noise driven. So I mean the horizon, the noise horizon is basically about 0 to 3 days. After about Wednesday we start to get back into the data, but the data is also going to be noise driven as well, but less so. than all these Fed meetings and minutes and you name it. So so basically, if you're trading short term with stops, obviously expect to be knocked about with all this going on, and we're basically taking a more medium term view. We're looking into at least the second quarter, so April, May and June for these trades, and we expect them to drastically improve going forward. So I hope that was useful. See you tomorrow for the daily briefing. Thank you.